If you are finding it difficult in knowing the direction or in predicting the direction of the market, whereby you do not know if price is going to sweep the buy side liquidity or the sell side liquidity first, in this video, I break down everything bit by bit so that you can be able to understand and be able to predict the market if it's going up or if it's going to go down. Do yourself a favor by watching this video to the end. Now, first of all, I talk about mapping the daily bias, how the easiest way on how you can be able to get or know the daily bias. I talked about it in this video. It's very easy without stress. You're going to know the daily bias. I also talk about the liquidity sweep forecasting, how you're going to know if price is going to take out the sell side liquidity and the buy side liquidity. It is very simple. The pattern is very simple. Once you know the pattern, then you can be able to trade with that. Then I combine both and give you guys the real strategy. I combine both the daily bias and the liquidity sweep prediction. I combine them together to give you the main what strategy. I also explain why this particular strategy works almost 99% of the time. Okay, I also show you guys what makes this particular strategy a high probability strategy and the best time to also apply it. I did taught you guys and show you guys in this particular video. I also show you the weaknesses of this particular approach. Okay, the weakness of it, if you approach it in a bad angle or in a bad edge, you're going to be losing. You understand? So all you need to do is to position yourself, learn it the way I taught you guys in this particular video. Okay guys, let's start. Okay, now on the first on the list is marking out our daily bias. How are we going to map out the daily bias? Now let me teach you this simple way, very simple way. Trust me, you're going to learn a lot from this video. Let me teach you this simple way on how you're going to be able to mark out your daily bias. Now, what you need to do is you go to the daily time frame. As I said, a daily bias needs to be marked out in the daily time frame. You understand? That is going to show you the direction of price in that particular day. In our daily time frame, all you need to do in marking out your daily bias is, now listen, all this data does not really concern you. All this data does not really relate. We are not using all these things for any purpose. You understand? We are only focusing on the first or last 6 to 7 candlestick. We are focusing on that. If you want to map up your daily bias, focus only on that. You understand? So remember, now let's calculate it. 1, 2, this is the daily one for today. This is a daily candle for today. So we're not using this as an example. We're counting this 1, 2, 3, 4, 5. This is a 5 candlestick. You understand? Now, inside this 5 candlestick, how many are bullish and how many are bearish? You can see we have 1, 2, 3 bullish candlestick and 2 bearish candlestick. This is enough data for you to know that this particular market is bullish at the moment. We are bullish at the moment, but the overall market trend is what? Is bearish. But at this particular moment, we are what? We are bullish. This is how to mark your daily bias if you want to trade every day. This is what I'm going to be doing. The next day, you calculate from 5 candlestick down. The upper day, you also do the same thing. Calculate from that 5 candlestick down. You understand? So after calculating that, I will see that the bullish side is bigger than the bearish side. What are we looking for? We are looking for a buy opportunities. You can see that this is 3 bullish candlesticks. So we are targeting, for us to have a buy opportunities, we are first of all going to target the sell side liquidity. After price have taken the sell side liquidity, then price will now move to the buy side liquidity. But if you are bearish, you are targeting the buy side liquidity first before moving down to the sell side liquidity. Let me show you what I mean by that. You go down to your 1 hour time frame. Since we are bullish, now we are targeting the sell side liquidity before spiking up to the buy side liquidity. For today, let's see. This is this first trade for the day. This is a bearish candlestick that swept the sell side liquidity before spiking up. How are you going to make from this market? How are you going to join this particular movement? You understand? You can see how easy for me to mark out or predict where liquidity is going to be swept. Very easy for me. This is what I do every day. You understand? So, are we buying or are we selling? We are buying, of course, because we are bullish, and because we are bullish, we are going to be sweeping bearish buy sell side liquidity. Now, let's open it very clear so you can see it, guys. We swept this side, then we go down to our 15-minute, 5-minute time frame to look for what? To look for our model 1 entry. Our model 1 entry. You can see in our model 1 entry that this is the low of that particular 1 hour candlestick, and price already swept the low of this candlestick. You understand? Now after the sweep, we are going to pick out that particular candlestick that causes that particular sweep. We pick it out, and we're going to wait for any candlestick that's going to move above it and close. Any candlestick that did what I just said, that candlestick is going to validate this model 1 that we marked already. Then we'll be waiting for retracement. The price is going to retrace into this particular model 1 that we marked before buying. You understand? So as you can see, this particular candlestick closes above this particular model 1 that we mark, showing to us that this particular model 1 is what is valid. Then what are we expecting since the model 1 is valid? What are we expecting? We're expecting to buy. We're expecting for price to retrace and tap us into here. But the price did that? No, price did not retrace. This is when you're going to apply order flow. What is order flow? Let me use illustration to show you order flow. You can see something like this. Now, in a order flow manner, price is flowing in a bullish movement. Price is doing what? Flowing in a bullish movement. Now, all of a sudden, we see a sweep of liquidity down here, and price will continue moving up. This is a sweep of liquidity. Price is continue moving up. Now, you are expecting to buy from this particular place, right? You're expecting to buy from here, but price did not give you any chance. Price did not go down to this place for you to buy. Price just maybe tap in between here and continue going up. Now, if you are trading order flow, price is going to create a fair value gap in between this place. Then this is where your entry will be, in between that fair value gap here. Then you continue the movement. You do not wait for price to come back here and tap here. You understand? So now if you can see this particular movement, this is the sweep of liquidity over here. This is the sweep of liquidity here. Price continuing the movement. Some traders will be waiting for price to return here. And after seeing this, they'll also say, yes, this is a valid confirmation. This is liquidity that price is going to sweep. No, price have already swept the liquidity. This is just an order flow retracement. The smart money traders, they're going to buy from the FVG from here, while you'll be waiting for price to reach here, which price will not do so. Price will continue what? Continue pumping, and pumping to the upside. That is order flow. Now you can see it from here. Price now, some traders will be waiting for price to return to this particular model 1 before they are going to buy. You understand? But price did not return. Price gave us an order flow. What is the order flow? This is the break here. This is the break here, and this break causes what? Causes AVG. These are AVG. Then smart traders will do what? We're going to buy from this particular AVG. We are buying from there, and our SL should be below. Your SL cannot be below here. No, because you're not buying from that model 1. You're buying from the order flow movement. So your SL will be below that particular, below this side or below here. That is where your SL is going to be. And after your SL is been there, you're going to see you target the next drawing liquidity. That is very important. Targeting the next drawing liquidity, which is here. These are net draw in liquidity. Then you're going to be able to catch this particular movement. You can see how sweet is it. You catch this particular movement. We enter this thing with a touch of our order flow. And this is what a 1:6 risk to reward ratio. As simple as that. Simple as that. What do? I mark out my bullish bias, which the daily time frame says already. After marking out my bullish bias, I wait for the sell side liquidity first. The sell side liquidity price swept the sell side liquidity. Then and I focus on what? On buying. After the sell side liquidity has been swept, I focus on my model 1 entry. After I get the model 1 entry, Price didn't tap me in. Price gave me an order flow movement. Then I followed the order flow movement, and price gave me a clean 1:6 risk to reward ratio trade. That is it. As simple as that. Now, why this always works? Now, because markets are manipulated by smart traders. Yes, smart traders manipulate the market. Retail traders like me and you, we enter early. You understand? Secondly, institution push price against the retail trader first. And thirdly, then price will now move in the real direction after taking us out, after taking me and you out. You see that liquidity sweep, all that liquidity sweep that I'm showing you, those are some people stop losses that price has already mitigated. People are trying to buy from there. It's rather they're trying to buy early, and now they now become that particular liquidity. Once price now sees the liquidity, us as a smart money trader, we're going to mark out that particular candlestick that causes that liquidity. We mark it out as our model one entry. As easy as that. What really make this strategy a high probability? Now you see, one thing about trading is that all strategy, in fact, all strategy are not 100% sure. Along the line they might not work, but this particular one, this particular strategy that I taught you guys is high, is going to give you a high probability win rate. You understand? Because of it comprises of three main situation in the market. First of all, direction, the buyers. Second, the liquidity, because liquidity is the main organ concern that moves the market. You understand? After sweeping of liquidity, the target, where are we targeting? The next draw in liquidity again. Thirdly, timing, section behaviors. The two major sections we have, the London section and the New York section, everything, these are the two major sections, and everything are in correlation with this particular strategy. These three perspective, they are all in correlation with this particular strategy, making it a high probability setup or a high probability strategy. You understand? Now, some of you guys might be asking, what is the best time to apply this particular strategy? Now, let me tell you, morning analysis should focus only on the London section setup. Your setup should come from the London section, because the New York section is going to serve as continuation. You understand? Continuation. Now, these particular sections, these are the sections where liquidity sweep happened the most. The London section, especially, and the New York section. These two sections, there's a high probability that you are going to surely see liquidity sweep, which are going to tap in and make your daily bread from it. You understand? So always focus on what? On the London section for setup, and the New York section for what? For continuation. Focus on these two particular section. Leave SA section alone, leave Tokyo section alone, Sydney section, leave them alone. They are all distractions. Now, what are the weaknesses approach of this? I listed three, but there are so many, but these are the three core important ones. First of all, the bias can be wrong if the higher time frame is unclear. Once you do not understand the higher time frame analysis, close the chart or you change that particular pair. Secondly, news events can disrupt liquidity patterns. Yes, like NFP, CPI, PMI, PPI, GDP, inflation rate, FOMC. All these are news events that can be so volatile during this particular period, and they can be able to disrupt the liquidity patterns or act or play out something that you yourself will be confused, and you don't trade blindly, you don't trade confusedly. You understand? You trade when you understand the pattern clearly. Thirdly is over trading skills kills the edge. If you are over trading, you trade, you hit stop loss, you trade again, you hit stop loss, you want to trade again, no, stop that. Okay, but if you trade, you hit TP, you trade again, you hit TP, close your chart. You understand? Don't overtrade. Overtrading complies both in winning streak and in losing streak. If you are losing, stop that. Stop overtrading. If you are winning, also stop doing what? Overtrading. So guys, see you guys in the next 4 days. See you guys in the next video. Don't forget to like, subscribe, and share this particular video.